Welcome to SIRA MCQ YouTube channel. Today we discuss Advanced Level A-Level Accounting Paper 2024 MCQ paper question number 8. Let's go to the question. Firstly we concentrate to requirement. Look here, this is a requirement. The net profit, this is the net profit. Net profit of the company. Net profit of the company. Look here, after above errors are rectified. Net profit. We must calculate net profit of the company after above errors are rectified. This is the error correction guideline. Net profit, they required net profit after above errors are rectified. Why? There are some errors are there. After the error correction, we must calculate the net profit. This is net profit after above errors are rectified. This meaning net profit, correct net profit, they required correct. Why? After above errors are rectified. Errors are corrected. This corrected errors means correct net profit. Look here, the correct net profit, we guideline correct net profit means there are, in the current situation we can see there are error profit. There are not corrected profit in the statements. This is the error correction statement. This is the error correction, not here. Profit correction statement. This is the 1000. This is the drafted profit. Drafted profit means there is a current profit calculated by the company. This is the not corrected profit. This is drafted, not correct profit. This is the not correct profit. After that we must adjust plus or minus. After plus or minus, credit or debit, plus or minus, we can identify the correct profit. Correct profit means after the errors are rectifying, after error correction, we can identify the correct profit. Look here, this is the PDF. We must firstly concentrate to question. Look here, the net profit as per the draft. Look here, draft financial statement. This is the draft means the current financial statements. Draft financial statements of the company for the year ending 31st March 2024 was 5 million. I said 5,000. 5 million. Look here, net profit. There is a current net profit as per the draft financial statement of the company for the year ending 31st March 2024 was 5,000. 5,000 means draft profit 5,000. Look here, 5,000. The following errors were revealed. Revealed means finded after preparing these draft financial statement. There are errors are included this profit. Look here, statements This is the bullet point. This is the errors. The total of sales journal 8,500,000. I said 8,500 had been posted to general ledger as rupees 5,800. This is the guideline. Okay, at this stage, this is the profit correction statement. There is a profit is calculated through there are two things mixing. What is it? This the profit, net profit calculated easily. We can income minus expenses. The net profit drafted or corrected or all profits calculated through these income minus expenses. After the correction of errors and correcting profit, we use income errors and expenses errors. Look here, this drafted profit was calculated using income and expenses. The rectifying these profit, we must use the above these. What is this? Expenses and income. This man was generated through the income and expenses profit. At the error correction or correcting errors, after these correction errors means profit correction, we use only income and expenses. Why? This profit is impacted by incomes and only income and only expenses. Therefore, we use income and expenses errors to rectify this profit. Look here, the profit was calculated income and expenses. Only profit, we can impact this profit using this one or this one. Therefore, at the error correction, we use expenses and incomes to adjust this profit, income and expenses. Look here, this is the error. What is the error? Total sales journal 8,500 had been posted to general ledger 5,800. Sales journal. Look here, sales journal related to which transaction? This is related to credit sales. Firstly, I identify the correct entry. What is the correct entry to post credit sales? Sales credit. Which amount? The correct one. Which amount? 8,500 had been posted to general ledger 5,800. Correct one is 8,500. Sales credit 8,500. Debit to which account? Debtor control. Debit 8,500. What is the current situation? Current error. Current error. What is this? The current situation is had been posted to general ledger. General ledger means total amounts posted to general ledger means both credit and debit. credit short and debit short. General ledger. Commonly, general ledger means all accounts. General ledger 5,800. All accounts 5,800. 5,800 posted to general ledger. Which accounts? These accounts. Debtor control debit. Debtor control debit. Debit sales credit. Sales credit. At this time, the current error situation. The current situation is lower values. Look here, lower values. The correct one is higher values. Look here, correct one is higher value. The current situation is lower value. Therefore, we must currently recorded lower values. Therefore, we must record too much these accounts entries to rectify this. To meet this corrected man, we must add some entry to correct this one. Look here, debtor control debit only 5,800. Debtor control debit, the correct one is 8,500. The current situation debit 5,800. To rectify this, we must debit lower value. We must debit another debit short to achieve this. Look here, this is a gap. 8,500 and 5,800. This is the gap between 2,700. This is the error correction gap. The debit short is lower. We must again debit to debtor control. Why? Debtor control debit short is lower. Therefore, we must again debit to debtor control debit to achieve this. Sales credit 5,800. This is lower. Why? The correct value is sales credit 8,500. This is a higher value. Therefore, current situation is lower. Therefore, we must credit again. Credit again. Gap. Credit is lower. We must go to this credit. Again credit. Again I credit sales. This is the error correction entry. Use this error correction entry, I can rectify this error, rectify this profit. Using which amounts? Only income and expenses. Debtor control is asset. Sales is income. Therefore, I select sales credit 2,700. At this stage, look here, at the error correction method, we must use income and expenses, both of. At this time, we must add only credit shorts. We must minus debit shorts. Why? The profit is credit dial. This is the credit dial. Why? This is the profit. The income is higher. The profit means income is higher. Income is higher means income is winning person. Income is a credit dial. Therefore, profit is credit dial. At this stage, there is a credit short. We must add this one. There is a debit short. We must minus this one. Look here, the error correction. The sales credit. We must add this 2,700. Credit shorts add. 2700, we must add this. Okay, the second error, look here, the second error. First one is okay. Sales commission payable 450 had been debited to sales account and credited to sales commission payable income. This is the sales commission payable 450. What is the correct entry? Sales commission payable. Sales commission payable. Sales commission payable 450. Sales commission payable means we must payable, the accrued. The commission sales commission payable means this is the expense related. The payable, no, this is the expense related. What is the double entry? Correct one. The correct one is the payable credit. Sales commission payable credit 450, debit to sales commission expense. Sales commission expense debit. The correct value 450. This is the correct one. What is the current situation? The current error. What is the current error situation? Look here. The current situation is had been debited to sales account. Debit to sales account. Sales account debit. Sales account debit. Which amount? There is no value directly said. Debited to sales account and credited to sales commission payable account. Sales commission payable credit. Which amount? 450. There is no directly said the amount, therefore we use the correct value 450. Look here, there is an error. This is the correct one. This is the error, current error situation. There is a same person in there. Look here, sales commission payable credit 450. Sales commission payable credit 450. There is a same persons. We must ignore these. Why? The correct one is sales commission payable credit 450. The current situation, sales commission payable credit. Okay, there is the same person. We must ignore this. Look here. The correct one is sales commission expense debit. This time, sales debit 450. Who is the error person? This one. This is the correct person. This is the error person. We must short opposite side. Why? Sales is debit. Already debit. To eliminate this, the currently debited, to eliminate, we must opposite short. Sales credit. Sales credit. Sales credit 450. Why? Currently debited. This is the error dial. Therefore, to eliminate, we must use the opposite side. Opposite side means debit, opposite is credit. Sales credit. This is the correct person. We use correct short. Sales commission expense debit. This is the debit short. Normally. This one sales commission expense debit 450. This is the error correction entry. Okay, the error person, we use the opposite side. This is the debit, we must credit, sales credit. The correct person, we use the normal entry, debit short. Look here, this is the sales commission expense. This is impact to profit. The sales commission expense is debit. There is expense, therefore we use this one. There is expense. After that, there expense or income, we can include this. There is expense, we use credit short or debit short. What is the debit or credit short? Sales commission expense was debit. There is a debit short, therefore we must minus this 450. We must minus 450 minus y, debit short. 450 sales commission expense. The next one is sales credit. Sales means income account. Credit, there is a credit short, we must add this 450. We must add this 450. We must add this sales again. Sales. Look here, the next error. Second one is okay. A bank loan installment of 850 had been paid and it had been debited to bank loan account and credited to cash account. This is a current situation. However, the interest of 150 included in this installment had not been recognized as expense. Look here, there is a expense recognition, but we use error corrections. Look here, there is a bank loan installment 850. Look here, bank loan installment. Bank loan installment paid 850. The installment means there are two dials in this installment. What are they? This is expense, interest expense and bank loan paid, loan portion, bank loan paid. Look here, the PDF said that 850 installment. However, the interest 150 included in this installment. 150 means interest. The remaining balance is 850 minus 150. The remaining balance is 700. This one. This is the paid amount. Paid amount 850. There are two things included. This one, interest expense and bank loan paid. At this time, what are the double entry of correct double entries? Correct entries means totally paid 850, cash paid 850, cash control credit 850. But there are two debit short. Interest expense debit 150, interest expense This is the correct one, no? Interest expense debit 150. The remaining balance 700 debit to bank loan. This is the correct entries. This one is the correct entries. Cash totally credit to cash account. Cash credit 850. The debit are separate accounts. Interest expense debit 150. Bank loan debit 700. Look here. The current situation is the vary from this. Look here. Bank loan installment of 850 had been paid, and look here, it had been debited to bank loan account. It means 850. It had been debited to bank loan account. The current situation means this is the current situation. Current error debit to bank loan debit. Which amount? Bank loan debit total 850 and credit to, look here, credit to cash account, cash control, credit 850. What are the same persons? Look here, cash control credit 850, cash control credit 850. Eliminate this. Look here, ignore this. Same persons. Current situation, cash control, correct situation, cash control credit 850. Currently, cash control credit 850. Okay, what are the error? Look here, bank loan debit 850 currently, but bank loan debit only actually 700. The correct situation. The current situation is bank loan debit 850. Actually, the correct one is bank loan debit 700. There is too much debit. Look here, there is the correct one, debit 700. Too much. The current situation, bank loan debit 850. Too much. Therefore, we must opposite side too much. The debit is higher. Currently, the debit is 700 only. The debit current situation is the higher. We must opposite side. Look here, there is a too much. Therefore, we use the opposite shots to deduct this. Look here, this is too much. Debit 850. The currently the correct one is only debit 700. Therefore, the current situation is too much debit. Therefore, we must credit. To eliminate, to deduct this, we must use the opposite side. Okay, to deduct we must opposite shots. Look here, bank loan, which shot? The debit is higher, we must use the credit shot. Credit, bank loan credit 150. This gap 150. The credit, therefore the debit is minus. Why? Bank loan credited. Okay, the credit 150 and debit to interest expense debit 150. This is the error correction short. What are the bank loan is liability, they ignore this. Interest expense is expense debit, we must minus 150. We must minus expense debit, interest expense. we can now calculate the correct profit. Look here, the 50, the plus dials, add this 850, 600 minus 55, 7,550, the correct answer. Look here, PDF, 7,550, correct answer is 3, 7,550. The question number 8, the answer is 3. Okay, the last we must discuss question number 9. Therefore we must meet question number 9.